everybody, and welcome to our webinar today. I'm really glad everybody could join us. So today we're going to be jumping in and talking a little bit about the finance suite. I wanted to kind of walk you through some of the things in the finance suite that you should know about. And the reason I wanted to do this today is because, you know, I'm commonly talk to our back-end team about some things that our partners just don't know. And because you don't know, your customers are coming in and they're not knowing this information as well. So I thought it would be a good opportunity for us just to go through and talk about, well, one, some new changes, some new funding programs, some new lenders that we've recently added, some moves that we've made there, some new vendors, some new funding or some new business credit sources, those type of things that you may not know of, know what they do, etc. But then I also wanted to use this as an opportunity to clear up some misconceptions, to go in and talk about some things that we don't really dive into at a deeper level, things that will help you better understand the finance suite. And the better you understand it, the better your customers understand it. So these are kind of surprises that you may not know of as you go through the experience, that in knowing so, and knowing is going to help you sell a lot more finance suites. So let's dive in and talk a little bit about step one. So one of the first things I want to talk about, and that I really don't ever, I think, really say, is that, you know, step one is not necessarily a mandatory step. Well, I said that wrong. Every step is a mandatory step, meaning the finance suite's not going to let you proceed unless you go through and go navigate through every one of these sub steps. But I'll use business address as an example. You know, I often talk about business addresses and not using a home address, for example. Well, although that is very important, it's not a must. If you were to use a home address, what you're going to find is that a lot of sources will still approve you. You're going to go through the process, get vendor credit, get store credit, get fleet credit, even get cash credit without issues in a lot of cases. But the reason that we talk about this stuff, the reason that these things in step one are so important is because it will also restrict you from getting applied with some sources. So for example, Staples, Office Depot, Home Depot, Lowe's, they'll all approve you if you're using a home address, but Walmart will not. Walmart will not approve you just because you're using a home address. And if you were to update your address to a physical business address, then in that case, Walmart would actually approve you for their corporate credit card. So that's exactly what you need to know about step one, is that every one of these sub steps doesn't mean you're automatically disqualified if you don't meet one of these criteria. But what it does mean that you can get denied with certain sources because of that. Certain lenders can be denying you because you don't have a business address. Certain sources like Walmart will actually deny you because you don't have a business address. Now, one of the new things that is a surprise that a lot of people didn't know and is very new is that now the reporting agencies are starting to add Google Street Views to the commercial credit reports. So this was really something that was a big surprise for one of our clients that called in the other day. She uses her home address and, quite honestly, has got a tremendous amount of credit and even access to loans using a home address. But what was surprising to her was when she most recently pulled her D&B report, she now sees a picture of her house on her commercial credit report. So that is something you should know, and something your customers should know as it relates to addresses as well. As one, as you should know, your business credit reports are public information. Anybody that wants your commercial credit reports can access your commercial credit reports. And if you're using a home address, now with these Google Street Views hitting our reports, it's very common for people to be looking at a picture of your home when they're making lending decisions, credit issuing decisions, as well as clients, prospects, potential investors. Anybody that just wants to go and pull your commercial credit report easily can pull your commercial credit report and now see that address. So that's something that a lot of people don't know. So when we look at step one, every aspect is important to helping you get the most amount of money. And that's really one of the best ways to explain it to a customer and for you to understand as well, is that if you use a name that's that puts you in a high risk industry, it absolutely will not disqualify you for a lot of types of credit, but it's going to make it more difficult for you to get a lot of different kinds of loans. So when we talk about business name, when we come in here and we help you access the restricted industries, you'll see these are restricted, an automatic decline if you're in these industries. These are high risk, which means stricter underwriting guidelines. Now, when it comes to corporate credit, you'll still probably be able to get a lot of this, even if you're in one of these industries. But again, some credit issuers will deny you just because you're in a certain kind of industry. So I actually went over this the other day on a PNC application that I'd received. The PNC application I'd received had specific industries. It said, listen, are you in one of these industries? That was one of the questions they asked on the actual application for a PNC credit card. And when you go further into their small print even said, look, we have the right to deny you because you're in certain industries. So there's a couple lessons to be learned there. The first lesson is that every line item on an application you complete is important. There's a reason that some credit issuers ask for 5 or 6 things and some ask for 15 or 20. It's because every single item you fill out with a credit issuer or lender is important and ties into the lending decision. And with that PNC application, I use that as a perfect example because in their world, they came in and said, hey, are you in one of these 6 industries? Well, that seems like a really weird question. As long as I've been in the lending sector, I know they're asking that because it's an immediate disqualifier. So I go to their fine print to then learn, hey, what are they saying about this? And sure enough, in the small print, that's exactly what they're saying. Another lesson to be learned by that is it's a really good idea to always look at the small print as well. Okay, so when you're coming in, if for you to be able to come in and look at the small print on any application you fill out is great. In that case, it told me that they were going to pull my consumer and business credit reports for regular updated information. So I knew they were pulling my consumer credit report and I knew there would be a PG. So the reason I bring this up is a lot of different things. First of all, industries, names that business names that reflect you're in a high risk history. It won't automatically get you disqualified, but with some credit issuers, a lot of lenders, it will automatically throw up a red flag as well. So just some things to think about. So as we navigate through step 1, you don't want to tell your clients that all these things are mandatory, the same as I'll tell you that they're not mandatory in a lot of cases. What I will tell you is that if you don't do these things, if you're using a business name that reflects you're in a high risk industry and you're using a home address and you don't have a website, these things automatically won't get you declined with some sources. With other sources, they may get you declined. And with other sources, the more of these red flags you're triggering, then the worse it can be. Meaning the more of these things that you don't meet, the more of these criteria you don't meet, then in a lot of cases, that could in itself mean that you're getting denied. And I'm opening up here where you can see that PNC application to take a step back. I wanted to see if I had taken images, and I had. So here was a little bit blurry because it's a screenshot of the actual application. But you can see here that on their application, they say, is your business one of the following? Marijuana, core money services, internet gaming. Well, again, I know these are high risk, so I know that they're asking this question as an immediate disqualifier. And then again, if you look at their actual small print, their small print here will even say in bold that bank does not lend to businesses engaged in certain type of activities. Now, notice that even in the small print, they don't put what type of activities they're preventing, but if you put the two together and you see the front end questions of industries that you're in, that they're asking if you're in, and then you put together the small print that they don't engage in business in certain types of activities, that engage in certain types of activity, you could put the 2 and 2 together that they're asking this question as an immediate disqualifier for this. And they're doing it just to save their computers time. It's the same theory here. The reason you want to avoid names that reflect that you're in high risk is you can already see what's going on here. Their automated computer system is looking for certain types of words. So if your company's name reflects that it has marijuana in it, for example, well, then more than likely you're going to get denied, even if you checked no here, just because their computer systems are already setting it up to throw up a red flag or even an immediate denial if they have an indication that you're in one of these industries. So lessons to learn, like I said, everything on an application matters. When you see things like this, know they're asking for a specific purpose. Again, the small print on these applications is worth looking at. It can reveal a lot of good information. You could even see here, If credit is granted from time to time throughout the term of the indebtedness, including obtaining my personal credit report file copies of financial statements from any accountant or accounting firm. So you can see here that they're even telling you that, which is why I always like to look at the small print. So again, any of these by themselves might not be disqualifiers, but in this case, if you are in one of these restricted industries, PNC is telling you up front they would deny you. It doesn't mean Home Depot would. This is important because a lot of people come through and they say, hey, I didn't get a DUNS number. I'm using a home address. Uline approved me. Quill approved me. Granger approved me. Staples approved me. Amazon approved me. Wow, this is weird. Why would Walmart decline me? Well, the answer is because you probably didn't meet one of the criteria we're talking about here. And in not meeting that, that alone can disqualify you for some specific funding sources or some specific credit being issued. So when we talk about business addresses, what you need to know is the number one and best choice you have is to use a real physical business address. The number two and best choice that you have is to use a virtual address. And the number three and worst case scenario option you have is to use a home address. You never want to use a PO box or a UPS. You easily want to use a home address above and above a UPS and PO box. So the only address types to really be completely avoid are UPSs and our PO boxes. And the reason for this, guys, is that what happens is a long time ago, lenders and credit issuers started populating a database of all of these UPS addresses and PO boxes. So if you use a company like that makes themselves look like iPostal, for example, iPostal looks like a UPS or looks like an actual virtual address, but it's $10 a month. And what it really is it's really a UPS address. The problem is those type of addresses are all in a database that credit issuers and lenders' computers automatically scrub and automatically produce denials. Well, back then, the guys that were in the virtual space industry, which are still there, I know some of the guys that started this space back in the beginning that still work with Alliance and still work with Regis as their presidents. You know, these guys fought a battle and won to keep virtual addresses out of this database. So this is why there's such a difference between a virtual address and a UPS. Virtual addresses are not in this database that lenders and credit issuers scrub. Well, actual UPS address and PO boxes are in that database and will automatically result in denials across the board with a lot of credit you obtain, whereas virtual addresses absolutely won't because they're not part of that actual database. So again, use a physical business address. Best case, it makes you look the most credible. Virtual address is the second best because nobody would know the difference. And third, use a home address, but don't use a UPS, don't use a PO box. It's something that you and all of your clients should know. As we move down through, the same with business entity. Business credit can be built under any business entity. The reason that we preach and talk about there being an importance of using a corporation or an LLC is because corporation or an LLC, you and the business are separate from each other. Well, there's a ton of benefits there. One is liability separation. If somebody sues a sole proprietorship or a partnership, they're suing you as an individual as well, which means your personal assets, everything comes into play in a lawsuit. An LLC or a corporation, you and the business are different from each other. So because you and the business are different from each other, nobody can sue you. Well, they can't sue you just because they sued the business. So that's one thing. I mean, who wants to be sued or put yourself personally on the line for what goes on in your business? That makes no sense. But secondly is the separation of liability. If you come in and you are an actual LLC or a corporation, you can build a separate credit profile. And if you default on that credit, then anybody can sue your business but not sue you. Okay, but if you're a sole proprietorship or partnership, all the business credit you get, even if you don't provide a social, even if you don't provide a personal guarantee, you can still be sued because you are the business. So again, you don't have to be an LLC or a corporation to build business credit, but you want to because if you ever really want to separate liability, then that becomes pretty important to do. And you know, one of the links that we created that you can easily duplicate and have somebody build on your website, you can even have our web guy, if he's the one that sets set this up, and he won't charge you a bunch of money. He's pretty cheap, which is why we use him. Put together a page like this, which is at creditsuite.com/legit, LEGIT. And when you're talking to people that have questions of why would you build business credit? Why is it important? Does it exist? Is it a fraud? Is it a scam? Of course, as much information as we put out there, a lot of people have questions about the legitimacy of business credit. What we basically done is just compile a list of articles from everybody from SBA to Entrepreneur to Inc. to QuickBooks to Forbes to NASDAQ and everywhere in between that we continue to have really good articles on the importance of building business credit, why you want to, the separation of scores, etc. So some of this stuff ties into why you want to separate the liability, why you want to separate commercial consumer credit and its importance. And again, you can easily come in and just duplicate this exact same page and create it on your own website that you're promoting business credit. It's a great one to go to just for anybody that has questions on the legitimacy of business credit. So when it comes to entities, the importance to know is that you can build business credit with any entity, but again, it's an LLC or a corporation that helps you truly separate the liability. Now, when we talk about phone numbers and listings and 411 and all these different types of things, again, we talk about some of those things where it's a good rule of thumb, but not a necessarily must. Let me tell you the necessary must. You need to get your business listed with 411, period. Because this is an absolute essential check that a lot of credit issuers do nowadays. It's something you absolutely do not want to avoid. Guys, this is why we pay for it. We do. We work with a company called List Yourself. We pay List Yourself for every single phone number that we push over there. We make it easy for you to say, yes, you want one. Yes, I want one, and enter your info. Every time you do this, we get charged, and we gladly pay that bill, because what we realize is that if you if you're not listed with 411, you just absolutely are not going to get approved with most credit issuers, especially starting vendors. This is a lot of the basic requirements they have is an EIN and 411. This is why we list and we handle this charge for you, because it's so important. We don't want people to skip the steps. Is it important that you have a fax number? Not nearly as important as you having a 411. A 411 is a must. The reality is a fax number really isn't a must, but it's still a good thing to have. If you're faced with a credit application with a fax number and you leave it blank, it does count as a red flag against you. And it's not going to in itself probably prevent you from getting any kind of credit that we know of. But again, in a world where you can create the perception to the lender or credit issuer that you're as big as you want to create the perception that you are, well then, hey, does any of the biggest companies that exist privately or publicly owned not have fax numbers? Of course not. Every one of them does. So you want to, because this naturally reflects your credibility, but this alone won't get you denied. 411 absolutely will get you denied. Okay, toll-free number may not actually get you denied, but again, it will strike as a count against you because you don't have an established toll-free number. If you're a pizza delivery shop, this is why it won't automatically get you declined, because maybe you can only do business locally. But again, most companies nowadays have toll-free numbers, have fax numbers. It's a reflection of credibility, which is why it's a really good idea to do. You wouldn't want to not do this and get denied for credit in the future, maybe even one type of credit because you didn't have this. But we've never seen anybody today denied because they didn't have a fax number. We've seen plenty of people denied because they didn't have a 411. So again, more to this point of everything here is important, but not necessarily essential. An EIN number, obviously you have to have an EIN number to be able to build business credit. It's built under the EIN. Some people think that business credit is built under the DUNS number. That's absolutely not the case. Business credit is absolutely built under the actual EIN number. You have to have an EIN. Now, a lot of people get confused here and say, I have to provide my social to get my EIN. Does that mean I'm liable? No, it doesn't. What happens is the IRS needs to know who you are. That's why the EIN exists. The social security number exists in this country because the IRS needs to recognize you as an individual in the United States. The EIN number exists because the IRS needs to recognize your business as a separate entity in the United States. It's why the EIN exists. Now, you don't have to have a social to get an EIN. You can come in with a TIN, meaning if you're a foreign national, you could still get a number and use it to get your EIN, but you have to have some kind of identifying number. And if you're a citizen here in the United States, your identifying number is the social. Doesn't mean you're liable for the business. It's the IRS's way of knowing that you're a real person applying for the IRS. Otherwise, everybody from countries all over the world would be coming in and getting fake EINs and doing all kinds of crazy stuff. So it's our government's way of regulating it. So customers will ask this: providing your social to get your EIN, providing your social to get your EIN does not mean you're liable. Providing your social to get your bank account is required because of the Patriot Act. Nowadays, we have to stop terrorists and all kinds of craziness from laundering money through our banks. So to do so, you've got to provide a social when you set up a business bank account. In almost every case I've seen, I'd say all. But again, that doesn't mean you're liable for what's going on in your business. So these are misconceptions that people are going to have. Hey, I provided my social when I got my EIN. I provided my social when I got my bank account. I am liable for what goes in my business. That's not true. You provide your social so the IRS knows you're a real person that's getting the EIN and they know who it is. And you provide a social when you're getting your bank account because it's required under the Patriot Act, because anything to do with money or the funneling of money, our government obviously keeps a pretty close eye on, and they need to know you're a real person, which is why they put that safeguard in place. You have to have an EIN. The two musts to get a lot of vendor accounts and a lot of credit is an EIN and a 411. If you don't have these, you're going to run into all kinds of problems across the board, as if some of this stuff isn't as mandatory. Business licenses really is the same. You're not going to get denied because for a Home Depot credit card because you're an unlicensed plumber. It's not going to happen. But as you start to get into loans, this can be an issue. If you don't have the occupational license you need, the county license, the state license, the industry license, then it absolutely will tie into helping you get denied when it comes to loans. So if you don't want to get denied for loans and corporate credit, you want to do the business address, but this is more important for the license than it actually is for the corporate credit. The business bank account seems kind of odd to even be in here, because here's the reason. They never ask for your bank account when you're getting revolving credit cards with Home Depot or Best Buy or Sprint or Sears or anybody. But the reason it's on here with bank account is because they will ask for bank references. You'll see a lot of credit that actually asks for and requests bank references. They don't need your bank account, but what they know is that you're not going to have a bank reference unless you have a bank account. So by asking for a bank reference is a nice way of saying, we're not going to approve this account unless you have a bank account set up for your business. So that's why they ask for bank references, but they know that you're probably not going to provide your bank account info. If you go to get a Home Depot credit card, they ask for your bank account and routing number. That's going to freak out and scare a lot of people. So in doing so, what they're indirectly asking you for is bank reference. They know you won't have it unless you have a business bank account, which is why it's a common requested thing, even from vendors, that you actually have a bank account set up. Now, we have a live debate going on right now in one of our Facebook groups, Get Business Credit, where people want to know, do you have to have an EIN to get an entity? Do you have to have, which comes first? What are lenders and credit issuers looking at? Are they looking at the bank account? Do they look at the entity? Or do they look at the EIN being issued as the actual business start day? And, quite honestly, it's a great debate, because the reality is all of them matter. There are lenders, a lot of lenders will primarily look at your entity start date per the Secretary of State when you set up the entity as when your business was established. But if there's any red flags, and a red flag could be a change of ownership in the entity, which obviously could be a sign of somebody selling a shelf corporation, then what they're going to do is come in and dig a little deeper. Look at when the EIN was issued. Look at when the bank account was set up to really determine if that company is legitimate. Again, doesn't come as much into play when it comes to revolving credit and corporate credit, but does come more into play when we start talking about business loans. So yes, the bank account setup date really does matter, because again, if there's any kind of change of ownership of an entity, they'll oftentimes revert to this or the EIN issue as determining when the business was really set up. If there's any questions that the business that was set up initially might not have really been doing business all this time. So if you buy a 5-year-old shelf corp that's had no activity on it, and then you buy it from somebody and they change ownership, and then you start to come in and try to get a loan, they go, whoa, this business just changed owners 3 months ago. So let me do some research. Let's ask you for your bank account information to figure out when the bank account was started. And that alone would show you, oh, you just opened the bank account for the first time for the business 3 months ago. Something's definitely odd. So this is why we have the bank account information here. We also have the merchant account information here because, again, it opens up a lot of lending options. It's not as much related to business credit building. It's more because it opens up a lot of lending options. We now even promote that our clients get set up with Square and PayPal and run some transactions through there because they're fairly easy, a matter of months in, 6 months or sometimes less, for even PayPal and Square to open up lending options because they have those. And those are more commonly conversations we're having. Guess what? We don't get paid when somebody gets a Square or a PayPal loan, nor do you. But who cares? It's in the customer's best interest. So we're trying to guide them here in step one with as many things as they need to know to basically build a foundation that helps them do two things: to get loans and to get business credit. So you must know this because I can't tell you how many case studies we have where clients come in and this is exactly what they say. Well, I applied for loan, I applied for credit line, I got denied. I found you guys, I came in, I found this and this in step one that I didn't realize was an issue. I fixed it. I turned around and got a loan. We hear this all the time. As a matter of fact, I do from time to time go through a lot of our clients and just record their success stories. And you'll see some of those now through postcard testimonials and some new things that we're doing. But I can tell you that that's the common theme. Went out, got denied, came in, found things in step one, fixed them, got approved. So step one is as important to somebody getting business loans as it is for them to get revolving business credit. So as we move into step two is also equally important. And here's why. First of all, Experian and Equifax will automatically populate credit reports for you if they know your business exists. Now, this is called firmographic information when it actually comes to the reporting agencies. That's what they refer to it as, is firmographic information. And the way Equifax recommends, or Equifax refers to this, is that, hey, look, if we have firmographic information about your business, including an SIC code, that seems to be their trigger. If they know your SIC code, then what they like to do is populate a report that looks just like this. I've seen thousands of credit reports, and I can tell you without a doubt that if I see this combination, a 27 to a 29 score, and I see here this recommendation of credit of $1,000 on a commercial credit report. If I see these two factors, 27 to 29 and $1,000 recommended credit, I know without a doubt that this person had a credit report populated for them, even though they have absolutely no credit. And here I'll show you what I mean. So the first thing you need to see is on the current financial stability risk score, this is about a higher risk of business you can get. And so you know the current financial stability risk score is designed to do one thing: determine your risk of going bankrupt. That's what this score does. Equifax, Experian, and DMB all have the same score. They all call it something different. It's all based on, will you file BK or will you not file BK? We see the number one reason is lack of trades. And as we scroll down here, we see that this is the end of the credit profile, page 3 of 3. There's nothing below this. Pay attention because you'll see it different when I show you the next report. So we can see here zeros, no accounts. There's no trade accounts here. And we see they're a high risk score, literally depicting they could be on the verge of bankruptcy. We see here a low score, a low recommendation of credit. And this is exactly what will happen in a lot of cases. So there's a couple types of people that we commonly see come in and buy business credit. One are people that just can't get loans. The other are people that are having a hard time getting financing or getting credit lines pulled back or called, or credit lines limits reduced because they have bad business credit. And this freaks people out. They call us and they say, oh my gosh, Here's what happened. I went in and I tried to get a credit line increase and they took away my credit line. They called the whole thing due. I tried to get a credit card. They denied me because my business credit was bad. Something relating to they went in to get a credit card. They went in to get a loan. They got denied because they have bad business credit. When we pull the reports, guys, this is what we commonly see. Somebody that has absolutely no credit, but somebody that has a bad score. And so the reason for this is why we do these search with Experian and Equifax. By coming through and doing these free searches with Equifax and Experian, we're able to see if anything pulls up on the business now that we actually should know about. And what happens is you're going to either enter a company name. And by the way, all you ever have to do is just enter the city and or the company's name and the state and do a search. And we have them do these free searches because one of two things is going to happen. You're either going to pull up a record or you're not going to pull up a record. It's one or the other. Or sometimes you pull up a record of a similar search name that's not exactly your own. If you have a record here, this means Experian does have a credit report populated. And obviously, trade lines means trade lines are reporting. When you have a record here with no trade lines, you could be looking at something bad and you need to pull that report immediately. And that's my advice and our advice. If you pull up a search like this and you see that something pulls up here at all, you need to look and see what's on your Equifax and Experian reports. D&B is different, guys. I'll tell you why. D&B needs 3 accounts reporting before they'll populate a credit report for the consumer or for the business owner. Experian and Equifax only require one piece of quote unquote demographic, firmographic information, which basically includes your SIC. So if they come in and they do a search with Equifax and Experian and they find any record, they need to pull the report because very well, especially if there's information and no trades, this is exactly what they're looking at. Okay, this is why. And I'm going to show you as we move into the next step why the next step becomes so important. I'm going to compare this credit report to another one. So this is something that your customers should know. They need to know that in our world, you can have a bad business credit report and a failing score, even if you have absolutely no credit, because again, what's happening is the reporting agencies themselves think that you're high risk just because you don't have trade lines. Just because you don't have trade lines makes you high risk. And you'll see this across the board with Equifax, Experian, and D&B. They all will tell you that part of the reason that your score is not good or not great is because you don't have enough trade lines until you do. So this is why these searches with Equifax and Experian become so important here. Okay. You also want to come in and do a lot of things with Dun & Bradstreet here. Now, here's the reality, and some of our partners have come back and got themselves in trouble with saying the languaging wrong. First of all, everybody should know that the DUNS number is 100% absolutely free. Everybody here should also know that Dun & Bradstreet will absolutely not want to tell you that under any condition, and if you get them on the phone, probably won't. Dun & Bradstreet is in the business, Dun & Bradstreet Credibility, that section of Dun & Bradstreet, which used to be a separate company that D&B bought back, is designed specifically to sell their Credit Builder program. And they try to sell you Credit Builder for a couple main benefits. One, you get your DUNS number with it. And 2, they activate your credit profile is what they say. Now, again, the reality is that a credit profile becomes activated with D&B automatically when somebody has 3 trade accounts reporting to them and a DUNS number. If you have those 2 combinations, they will populate a report. But all day, every day, they will try to convince you that they are the only ones that can activate your credit profile, that if you want one, you have to pay them. And this is why if you or your customers ever get on the phone with D&B or ever get an email or ever get mail from them, these are the things they're referencing. You look unestablished. You look like you're near bankruptcy. Somebody's inquiring into your business. You need to get your business credibility built. You need to make sure that you get your credit profile active. We're the only ones that can do that. We charge $1,500 to $2,000 to do it. So even though you know this now because I'm telling you, a lot of the people you're talking to don't know this. So when they get a letter in the mail from Dun & Bradstreet, when they get an email, when they get a phone call that's a sales pitch, and they're told, look, you're on the verge of looking like you're basically ready to file bankruptcy, which is somewhat true because the financial stability risk score will show that if somebody has no credit, and you need to build your credit profile because people are inquiring into your credit report. That's not true. Most people aren't inquiring. You're just part of a list they're calling. They're very convincing. And I've recorded some of these phone calls with D&B with their permission. Okay. And I can tell you they are extremely convincing on the phone. And so what they're doing is they're basically convincing you and convincing customers to buy something they don't. And I can tell you even have paying partners that have received this education still pay because they get so freaked out on these phone calls. So we tell people, look, we help you through the process of getting your DUNS number with Dun & Bradstreet and activating your credit profile without paying a dime to do so. These are things that D&B will try to charge you $1,500 to $2,000 for. That is 100% an accurate statement. These are things that D&B will absolutely need to charge for, but yes, they don't need us to get around it. If they have a really good education and they got the proper training, they could know how to get their DUNS number and activate their credit profile without being a paying customer. But the point of it is that most people don't know that at all. So when we talk to potential customers, we say, look, we help you through the process of getting your DUNS number and getting your credit profile activated with Dun & Bradstreet, Equifax, and Experian without paying the hefty costs that the reporting agencies like D&B will try to charge you to do the same thing. And this is a huge benefit to your customer because they're going to save $1,500 to $2,000. I deal with clients all the time that have paid that $1,500, or people on YouTube, etc., that have paid the $1,500, that are paying $159 a month and saying D&B is not giving me anything. Well, no, they're not going to. Okay, so that's the point of it, is in this step, they want to do the search with Experian and Equifax to see if anything's reporting, because even if nothing is, they can have that failing credit report that we just looked at here where somebody has a failing report and score even with no credit. We also want to go through and help them get their DUNS number without paying for it. We walk them through to understand that D&B will try to sell them if they don't need it. And we explain to customers that in step 3, we're going to activate your credit profile. Never try to be convinced that you have to pay for that. And that saves the client the $1,500 or $2,000 that they're going to pay on their own in 99% of the cases because they just don't know any better. And that brings us to step 3. So a lot's changed in step 3. 60 days ago, we had about 7 sources in step 3, and now we have about 13 sources available in step 3. And some of this has to do with me zooming in too much, which is why these things look weird. 13 sources in here and climbing. Okay, we continue to add more and more sources here. The reason we continue to add more and more sources is something you should tell your clients, because we have exclusive sources in here that you're not going to find anywhere else. And there's a reason for that. We're creating them. What we're now doing is we've realized there's so few vendors that will give somebody credit as a startup, that will give somebody credit when they have done and report it to the business reporting agencies, that we now help people go to Experian, D&B, and Equifax and actually get reported. Okay, we're even trying to work on that ourselves, but the reporting agencies don't like people that are involved in credit to have access to be able to report or pull credit. That's just the way of the world. In the consumer credit world, if you're even in credit repair, you cannot have the ability to pull credit reports even if you own a mortgage company, because again, credit bureaus do not like anybody that works with credit to have access to actually report or pull. That's the exact same issue we're having now. And the fact that for some reason Experian thinks we are a credit repair company that sells trade lines, which we are trying to get past. But we've been very successful at helping other people that have legitimate businesses go to Experian, Equifax, and D&B and helping them through these steps to actually get reported. As a matter of fact, I'm pretty sure that if you go to creditsuite.com/reporting, you'll even be able to pull up a free resource that we created to help people through the process of getting reported with Equifax, Experian, D&B, and CreditSafe. So this is something new we tackled in 2017. There's not a lot of vendors. Let's create them. Let's help people with legitimate businesses get the ability to report. So this is going to help us open up step 3 with even more sources than we've ever had before, and sources our clients can really use, which, let's be honest, that's been one of your complaints, whether you voiced it or not, and one of mine as well. And we've now got a lot better of doing this by helping people actually come in and get set up to actually report to these reporting agencies. Okay. The other thing is that a lot of these are sources they could use. Global Voice Direct, we literally just added yesterday, and I've been hunting these guys down for 2 months. And I'll tell you what happened, because this is a perfect reflection of how hard it is to get a source in here. This was a source that I solicited our team the first week of November, and it was just added 2 months later. The reason it was added is because we go through a 4-point verification process, that we go through an elaborate process 4 different times with different people within the company to verify that the information we're putting in here is actually correct, that the background check works out. There was a case here, there was a concern because the credit line is $7,500 they give every customer. Their concern with our data team was, hey, there's a good risk that there's a good chance these guys are selling trade lines. We're concerned about that. We're not going to let them get to the back office, because if they're selling trade lines, it could be problematic. We had to go through several layers of checks to verify that they're not selling trade lines. They're just giving every client a $7,500 worth of credit account, or a lot of their clients. So this is fantastic, because even though commercial credit reports don't show the limit, it does tie into how much your future limits are. Okay, so this is the way all credit works, consumer and commercial. If your credit limit, the highest one you have on your credit report, consumer or commercial, is $5,000, well, then that means most other credit issuers that follow will give you about $5,000, right? You've seen this before. Somebody raises your credit limit, and then you start getting notices in the mail that your other credit issuers raised their limits as well, because they know you're typically going to use the account that has the highest limit. Well, in the commercial world, it's the same way. If you put a $7,500 trade on your credit report, even though you only see the recent amount you've used and not the limit, credit issuers' computers are pulling your limits. So if you have limits of $7,500, it helps you get higher limit accounts in the future. So I love this account for a couple different reasons. One, they report to D&B and Experian regularly. On the 1st and 15th, they push data to these 2 reporting agencies. Secondly, look at what it takes to qualify, an EIN. Anybody can get it. Even as a brand new startup, you can get this account. Another thing I love about it is that they sell phone service. I mean, it's stuff that everybody can use. They have virtual office phone numbers for $25 a month. That's cheaper than RingCentral, and they report your payments to D&B and Experian. You get 2 payment experiences with a $25 a month purchase for something you have to have anyways. You need a phone number. You need a virtual phone. They're cheaper than places like RingCentral. So this is one of the best accounts I've ever seen added, because it's a high limit, $7,500. It's only $25 a month to actually get something you really need, which is your phone. It's a true starter vendor. They'll give it to anybody, okay, that has an EIN number, and they report to Experian and D&B and do so twice a month. It hits every single category that we look at for being a good trade. Pilot Flying J, for example, is one that we just added. Guys, this is one that has a ton of benefit. There's a lot of stuff you can get at Pilot Flying J, and they report to D&B. They're going to require that you have an EIN, and they will ask about your revenue as well, okay? And the amount of credit that they give you will oftentimes depend on how much you're actually spending, but this is a great starter vendor that's recently been added in here as well. Venture Logic, this is one that's fairly new too, and look at what makes these so good. Look at who they report to. D&B, Experian, and Equifax. That's fantastic. And guys, they offer website hosting. I mean, seriously, every single person that has a website has to have hosting. So instead of paying GoDaddy, which, by the way, I'm a huge fan of GoDaddy because I think their servicing is awesome, you can get your websites hosted here. You don't have to basically have any requirements to get approved beyond an EIN, and you get a trade line now on all 3 of your commercial credit reports just by getting your web hosting set up with them. So look, I've heard a lot of people in the past say the problem with these vendors is there's not a lot of stuff that we can use. Guys, everything we've looked at here you can use. Pilot Flying J, there's a lot of stuff you buy there, including fuel. Okay, Venture Logic, website hosting, we all need it. Virtual phone numbers, nowadays, we all need it, and you're building business credit with the stuff that you're getting as well. DigiKey is one of the ones that we just added too, okay? And they have all different kinds of electronics you can buy, and they report to D&B, which is a great source. 99 Designs, okay, DS9 Design, excuse me. DS9 Design comes in and does digital marketing. They do online reputation. They do SEO, and they report to Experian and Equifax. So now you can start getting marketing services and build your business credit while you're actually paying for advertising and marketing services. So we have a lot of people that want to grow their business and they want access to marketing things that are vendors that also build their business credit. A lot of people asked about a secure option. So we threw Wells Fargo in here to give people a secured credit option if they want to. I'm not a fan because they do a credit pull and you need pretty good credit to get approved. So I'm not a fan. But everybody wants a secure credit card, and Wells Fargo offers the best. Okay, I won't go through a lot of these other ones. Quill, Uline, Labor Ready, Granger, they've been in here a while. Strategic Network Solutions, but all stuff we can buy. Okay, Quill, for example, we've got a client that's a perfect success story. He's built over $250,000 of business credit to date, get a $100,000 Amex. They've got all different kinds of things. But with Quill, they actually came in and bought bandit signs. They bought marketing flyers that now they will actually print, that they actually print for you, for example. So if you come here to Quill, my favorite section of Quill, let me see if I can find my favorite. It's products, here, products. And when I come down to products, it's, where are you at? It's not you, which this is pretty cool, by the way. The shipping, packaging, and mailing supplies. I'm pretty big on that as well. But it's called, man, where did you go? Custom print. So custom print is my favorite section of Quill, because if you look at it, you can get brochures printed, you can get banners, you can get flyers printed, you can get envelopes done, you can get bandit signs, you can get postcards. There's all kinds of marketing materials you can get at Quill. And one of our clients, Thelma, was a perfect example. I did an interview with her. She came in, they actually got duped by a company that took all their money on a marketing campaign that never worked. They used Quill to get marketing flyers printed in bandit signs. They went business to business with their flyers. They put these signs all over the place. And that's how they basically got their initial business off the ground, was just coming in here and was just using Quill. Now, Andrew says, I currently have my 800 number with Freedom Voice. Can we transfer that number, Vandy number to Glovis? I have no idea. I really don't know. Usually you can transfer a phone number over to a new phone provider. There's usually a delay while that happens of maybe a day or hours. But what I would do is I would come right through here, Andrew, and I would just come in and I would ask them. That's exactly what I do. I really can't say because I've never asked him that question specifically. Okay. Behalf is great if you accept payments from customers. So there's some of the oldies but goodies. Hardware Express, Strategic Network, Uline. But again, now there's more services than ever that we could all really use in here, which is important. Now, let me show you on a commercial credit report why this is important. So we looked at this guy right here. We looked at this 28 score, 1,000 recommended, no credit on the credit report, right? There's no credit here. There's no trades. Let me show you the opposite of what happens. Here's a 96 score, right? I mean, this is about a lower risk as you can get. 96, high risk, low risk right here. The bankruptcy, they're not really low risk because there's not a lot of data here, but they're halfway. So we can see that when it comes to their Intellis score, they're about as lower risk as you can get. 96 score, 2.5 times the amount of recommended credit. Not a lot yet, right? $2,500. We're getting up there, but not really high. But here's what's interesting. And by the way, this one was founded in 2015. Actually, this one was years on file, 2016. This one years on file was 2015, so pretty similar. But here's what's interesting. They only have one account on the credit report. Packaging, it's probably Uline. You can see here, these are inquiries. Corporate linkage, other businesses they're linked to, other facts we don't care about. We see here, here's the summary data. And remember, on this report, under the summary data, there's nothing else. I can't scroll down. But on this one, we see here under the summary data, we see one trade line, packaging. What's interesting is we could even see the process here. We see they were a 28, just like this company, because they had no credit. So they were a 28. They got that one account and they shot up into the 90s, the 96. So how's this possible? It's possible because business credit scores are based on how you pay. So what they did was they got one account with Uline. They paid the account as agreed. It took them literally out of the toilet here with a 28 score, failing score, all the way up to a low risk, high score. And now all of a sudden, that automated denial that they get, they're probably not going to get. They're not going to get approved for anything based on their business credit because they don't have enough trades. But they're not going to probably get that same denial they got before because they no longer have a 28 score that automatically triggers the denial. Now they have a good score. And this was with only one account reported. Now, again, if we were to look through this, and let me open up some more of these guys, and I'll show you even more how this works. We see here, this one's got a bad score. They don't even pay their bills all on time, but their credit recommendations climbing, 21 grand. The reason it's climbing is the number of trade lines is climbing. Look at the number of trade lines that these companies are getting. So as you get more trade lines, the amount of credit you're recommended continues to climb. So this is the big misconception. One of the surprises of business credit is a lot of people that think that credit is issued based on revenue or time in business, but it's not. What it's really based on is the number of trade lines you have. And here's why. Because look, if you've been in business 1 year, but you have 30 trade lines of people that you paid as agreed, do you really think Staples is going to deny you because you've only been in business a year? That's insane. That makes no sense whatsoever. If you have a bunch of history that shows that you're paying as agreed, that in itself is what's actually opening up businesses to get higher recommendations of credit. Here's an 80 score recommended for 65,000 in credit, and we start to see the number of trade lines continues to climb. And it doesn't take a lot. This person only has 6 accounts and is already being recommended. And we can see here because one of these cards has a recent high of even $45,000. Now, Shimon says, can we Equifax report for less than 99? Well, you can get $20 for Equifax credit monitoring. It's 99 for one report, or if you sign up for monitoring, it's only $20. So we continue to see that as we add more credit here, and this is another example, guys, this is a different account, 27 score, 1,000 high. What does this mean? Do you know what this means? You know what we're going to see when we scroll down? Nothing. Look, guaranteed, nothing here. There's nothing. UCC filing means they have a lien, doesn't mean they have any kind of credit. There's no credit here. Anytime you see those two combinations, like I said, it's somebody that doesn't have a lot of credit. So we can see here that the more credit you add, and I'm trying to give you a high-end example of exactly what, of course, that would work out that way. That would be the last one I'd open. It is literally the last one I opened. That's funny. So here's one that's 724,000 in recommended credit. But the reason is that if we look down, we see, well, if it would populate faster, we see how many trade lines they have. So again, a lot of people want to know, can you use business credit and business alone, credit alone to get a loan? Not really. And here's why. Because as your business continues to grow, other factors like this business's sales, their employees are on here. They start to see not just how many trade lines you have, but how much money you're using. So this is a common misconception. A lot of people say, hey, I have, 7 trades, but the highest limit I have is $2,000. Well, that's because you're not using any of the trades you have. You can't just spend $50 with every trade because they're seeing how much credit you're using. And if they see you using a lot of credit, then that's what will help get you a higher limit, because they're not going to give you a limit of 10 grand if all you're ever spending with every account on your credit report is $100. Doesn't that make sense? Doesn't that make sense? So it's not just a matter of getting the credit, it's a matter of using the credit. They want to see that you're using higher amounts of credit. That and your limits will be what makes it where you're getting higher and higher and higher limits. So again, very important things to know. So these vendors become very important because we take somebody from no credit profile or bad score here because they have no credit, all the way up to even one account brings them to good score as long as they pay their bills as agreed, from failing to excellent, even with one account reporting. And as they continue to get more credit, then the amount of recommendation for credit increases. And this means they get higher limit revolving accounts, and it also ties in with loan approvals as well. So there seems to be this theory out there. There's 2 types of people that I deal with on the negative side of loans. Well, you can't use business credit and business credit alone to get a loan. Of course you can't. You can't use one of anything alone to get a loan. If you want to use any kind of business loan, a lot of factors are going to tie into it. Your revenue, your sales, your profits are looked at commonly, your personal credit, your business credit, your bank credit. They're looking at a bunch of factors when you come in to get loans. But with commercial credit cards, for a $30,000 credit card, for a $20,000 chasing, our client just got a $100,000 PNC account, all with no guarantee and no credit check. These computers are issuing a lot of these approvals automatically with no manual underwriting. And one of the primary drivers of approvals is the number of trade lines you have. And that's one of my tips. If you want to build business credit quickly, in step 3, don't just get the 3, 4, 5 accounts that you may need. Get more than that. Get every one you can use. Can you use Global Voice Direct? Get it. Can you get Flying J? Get it. Get Venture Logic. Get your SEO moved if you want to. Get set up with DigiKey. Come in and buy stuff at Quill. I still buy stuff at Quill today. I still buy stuff at Uline today. Use the stuff. Buy it. Use the stuff and have as many trade lines as you can. I buy first aid kits and batteries like they're going out of style from Granger. But in doing so, that gives you Quill, Uline, Granger. That's 3. It comes in, it gives you Global, Flying J, Venture Logic. Now you've got 6, maybe even DigiKey. Now you've got 7 in this step, and you built business credit with DMB and Experian, more on DMB. You built some with Equifax. You built more with DMB. You also built more with DMB, more with Experian. So now you've got pretty well-rounded credit reports by grabbing those. And remember, when you get 3 accounts from this step, this is what populates the actual DMB credit report. As long as you got your DUNS number, now it populates with 3 accounts. And even if you had an Equifax and Experian that was bad, now you're able to come in here into step 3 and make it good, just as you saw on real commercial credit reports. So again, some really cool tips, some really good insight that you want to show your clients. So I know I'm only halfway through, but that's okay. I'm not going to go through a bunch more here in step 4 through 7. So we'll try to fly through in less than 5 minutes. So monitoring business credit. Well, look, if you go to Equifax, it's $20 a month if you know what you're doing. As you know, a lot of people, Shimon just typed in, I think it's $99. It takes a while to dig into Equifax to find their $20 a month program. And by the way, it's a nightmare when you get it. You even have to sometimes call them or contact them to get it set up. But the bottom line is it's $20 with Equifax. It's $159 to $199. DMB has 2 packages, $159, $199. And Experian is about $50 a month. So it's $210 a month of what your clients are typically going to pay. Now, you now know that we now have a relationship with NAV. We are their only white label partner where you can actually come in now and get the credit reports for only $24 for Experian and DMB. Guys, look, most of the people you talk to don't know NAV. They don't know NAV even exists. All they know is that you're right. If you go to DMB and Experian Direct, you're going to pay $210 for what they can now get $24 with NAV. There's a reason that we worked with NAV to get $24. It's cheaper than even they charge. So this is literally the cheapest place anywhere to get Experian and DMB reports. It's only $24. And they get all the information here from Experian DMB, business summary data, judgments, tax liens, all their trade accounts, UCC filings, their credit scores, public filing information. They get regular alerts here that we just had added. So we just had them add alerts in here so they get notification of anything that changed on their business credit reports. They get it with DMB and Experian. Guys, here's why this is such a big deal. It is $210 a month if somebody went to Equifax and Experian and DMB, and most don't even know about NAV. So that means they're going to spend over $2,500 a year for credit monitoring. And with us, they're able to come in here and get it for only less than $300, which means we save them $2,200 a year on credit monitoring alone. Okay. And why that's important is because if you're selling the finance suite for $2,500 or $3,500, you just justified the entire price. Look, you don't need to pay for 411 listing, which if you go to list yourself is $30 a month. You don't need to pay Dun & Bradstreet money to set up your DUNS and get your credit profile activated, which they'll try to charge you for. You don't need to get credit monitoring and spend $2,500 a year. It's only $2,200 for us. So it's literally cheaper for you to build business credit with us than do it on your own, because again, we help you with a lot of these things that you won't know, so that way you don't have to pay these exorbitant costs. It's part of what we do, and in doing so, it becomes even cheaper to build business credit with us than do it on your own. And that's something you want to know. Look, can they go to NAV and get 20-something dollars for credit monitoring? Sure they can, absolutely. They're going to get the same thing that they'll get that NAV puts right into our system. But the reality is most people don't know about NAV. So because of that, when you're talking to a customer, you want to tell them, if you go to D&B Direct, it's $159 a month at least. If you go to Experian, it's $50 a month at least. They have more expensive packages and plans. My Slack is going crazy here because this is how our team communicates with each other. So again, you're going to spend $2,500 a year for credit monitoring alone. Through us, we have the cheapest credit monitoring anywhere at only $24 a month. That saves you $2,200 every single year just on credit monitoring, just because you're a client, which is the equivalent of the entire enrollment or half the enrollment, depending on what you're actually charging. So something your clients should know. Now, as we continue to step 5, 6, and 7, this is where so many people fail to build business credit. We have people that think they're smart and they enroll as clients and they take some snapshots of stuff, and then they end up quitting, and they all come back because what they realize is that this information changes regularly. Knowing that in step 6, Amazon will approve you isn't enough. You need to understand the actual specific requirements for every single source. And guys, I can't tell you how difficult this is. Because I didn't even expect it or think about it until I tried to get a vendor into our own system. And I had to fight my way through 2 months to get the vendor in here, because our team scrutinizes the information at a level I've never seen information scrutinized. And they have to, because by doing so, they only bring you information that's accurate, information that's not listed anywhere. And now now more than ever, we're creating relationships within all of these sources. So your customers need to know that we have about 4 or 5 safeguards to make sure that they can get approved. 1, we put the credit in order of tiers they should apply for. 2, we tell them how many accounts they need to get approved for each source. You can see right here. 3, we gray out everything that they actually cannot qualify for. So they'll know, and they can't even apply unless they actually meet the requirements. And 4, we list the underwriting guidelines for every single source. So there's 4 safeguards for us to make sure that the accounts you're applying for, you're actually going to get approved for. This is why we tell clients we take years of business credit building and condense into only months. If you don't know this, congratulations. You got our free training. You now have Uline, Quill, and Granger. What do you do now? What other vendors do you use? I don't know. Well, of course they don't know. Almost all the vendors in our back office, I don't ever talk about. I talk about Uline, Quill, Granger, and sometimes Wells Fargo card. It's about the only ones I ever talk about. A lot of the newer ones and the future ones we continue to add, we're not going to tell anybody about on any kind of training. People don't know about it. They don't know about them in the forums. And the other problem that people have is they're still out there promoting Seton. They're out there promoting Gimplers. They're out there promoting a bunch of other sources, a national pen company. And everybody's spending all this money with these companies thinking they report to the business reporting agencies. None of them do. And nobody knows that. They're trying to get information people in forums and groups that's outdated, that's inaccurate. As a matter of fact, just today that came up in one of the groups that I'm in Facebook. They said, Ty, why aren't you correcting all this misinformation? And my response is, I can't. It's impossible. There's so much misinformation out there about business credit that I don't even have enough time in my day for my entire team to try to manage and correct it all. We have to let you all discuss it as a group and figure it out. The bottom line is, if you're out there trying to do this on your own, you're going to spend years figuring it out, because you're going to be getting credit with Seton. You're going to be getting credit with Gimplers. You're going to be getting credit with National Pen Company, thinking that they're vendors that will report, and none of them do. And now you spend money and you wait and nothing reports, and you wait and you call them and nothing reports. They tell you it takes time, and then you call and get somebody else on the phone and they say, we don't report. I don't know what you're talking about. And now all of a sudden you've wasted 2 months waiting for vendors to report that never were even going to report to begin with. These are the type of things you want to let customers know, because these are the type of things that help us take years into months when it comes to business credit building. And I won't go through a lot of these sources, but obviously there's a lot of them there. I'm going to wrap up in about 2 minutes because I know I'm about 5 minutes over. So step 7 is important because in step 7.2, there's a lot of non-reporting trade lines. So why would you want credit with these places? Well, the reason is because these places, even though they don't report, are still pretty good to have. It's pretty good to get Ford commercial vehicle financing without a PG or credit check. If you have AT&T, well, it's good to know you can get a commercial credit account with them and use them as a reference. So a lot of sources in this step work well because they work as references. Maybe you can get stuff that you can use at Newegg or Northern Tool or AT&T, and in doing so, they act as references. Or some of these, a lot of them will give you business credit just based on you having enough trade lines. So there's 2 benefits here in step 7.2. People that will give you credit that you can use as trade reference, and people that will give you credit strictly based on your business credit quality. And again, in step 7, there's just so many sources where it comes to Visas, MasterCards that you can use for multiple different purposes, even fleet credit that you can use for multiple different purposes as well. And again, we continue to add these accounts, but they change all the time. BJ's had a great account that months ago had no PG. Now they have a PG, so we remove it. Then they come back and they have no PG, and we add them and we remove them. Okay, it's the way a lot of them is. So a lot of these rotate in, a lot of these rotate out based on whether they're offering a PG or not. A lot of cases, the credit check's not an issue. It's the PG that is the reason that we don't add them. As a matter of fact, we have so many vendors in step 3 and so many other sources we could add that this is something that we're going to probably be adding in 2018. Accounts that don't have a credit check but will have a PG. So you have a choice. If you don't want a credit inquiry or credit is an issue, you can still add all of these sources. Just know there will be a PG. But our motto has been no PG for so long that we've stayed away with it. But as we start to see this list get bigger and bigger and bigger of accounts that you can get with no credit check based on business credit quality, but you'd have to provide a PG, well, we're realizing we really want to probably create a subsection to give you the choice of accessing a lot more credit, because there's a ton of retailers out there that will give you the credit with no credit check. They just require a PG, so we don't add them. So I might dive in and talk more because I didn't get a bunch of chance to talk about loans. I will talk to you a little bit about loans because I told you I wouldn't. My apologies. I'm over. I'm not usually over. So loans, we've added a couple different kind of loans you guys need to know about, and we've actually got pretty good at both. One are called lines of credit. We're all familiar. Our clients have asked about them for a long time. We've added some sources that a lot of you have been really, really impressed with. One of them has absolutely no credit check whatsoever. They don't ever pull business or consumer credit. They're based on one of 2 things. You either have account receivables that you can show through your software like Xero, QuickBooks, or you have consistent revenue and you don't overdraw your bank account. It's kind of similar to what they look for a merchant cash advance, but they give a credit line, and it's an interest rate of about 0.5% for every week the money's outstanding. So if you don't pay the credit line back for 6 months, you pay about 4.7% on your money. So an interest rate less than 5% with no credit check based on account receivables or revenue. We love that credit line, guys. I'll give you 2 examples. We went in and got approved. We got approved for 30 grand. We used it a couple times. We just asked them for more. They asked for our tax returns. We supplied our tax returns. The next day we got approved for 100 grand. We have a $100,000 credit line. We went through to make sure that this thing works. It's phenomenal. One of my buddies came in, wanted a merchant cash advance, wanted 30 grand. I said, absolutely not. I won't put you in something that high rate. Let's try this rate first. He got approved for 6. He provided tax returns. He got approved for 30. So phenomenal credit line, no credit check. We've got another one, several of these that rolled out because we've added a lot of new lenders, which I'll talk to you about. We've added Cabbage. We've added some other lenders, including Lendio. Guys, these are hard to get with. In order to get with them, you have to be what's called a super broker, which means you have to do a lot of volume of deals to get these kind of relationships. To give you an idea of how rare it is, Lendio, we are one of 11 brokers that they work with. One of 11. The entire company, all they have is 11. We're one of 11 that we went through. And again, it's really tough to get in the door. So we've been able to add these new lenders, which have given us term loans and lines of credit. We've got lines of credit that a lot of them only need a 620 FICO score to get lines of credit now. Some of them have no credit requirements like the one I just told you, and term loans. And for term loans, they're typically wanting about $10,000 a month in revenue and at least a 620 FICO score. We are in a mad dash right now, going back through files, getting files submitted. So if you have past customers or current customers that are looking for term loans, that are looking for lines of credit, here's what you should know. If they have revenue of about 100, 120,000 a year or more, then they're a good candidate as long as they have a score above 620. 620 and 100 grand a year or 10 grand a month in revenue or 120 grand a year in revenue will open up most of those funding options. Some of them have no credit requirements. But again, 620 and 10 grand a month in revenue opens up a lot of different options. And there's too many lenders to mention, but we've got a lot of lenders that are doing them. The one we just got done, for example, last week, they do hair braids, hair extensions of some sort. And we got the client $100,000 term loan. The rate was spectacular. The partner freaked out. The customer freaked out. It took us less than a week to get somebody a $100,000 term loan that would have usually taken 4 to 6 months to get through SBA. We got it done in a week's time. So you're going to be getting a lot more notices. There's a lot more things we're doing, but those are two products that I wanted to at least make sure you guys know about. I've held you over in my apology. I usually wrap up at about 4. But I wanted to let you know of those, of a lot of the stuff, because these are the secrets that a lot of people don't know about. These are the misconceptions that people have. This is the information that your customers should know about. And again, as I have more time, I'll get into more funding programs, how these new programs work. We'll talk about more different kind of programs we're adding. But the two things we wanted to tackle going into 2018 are term loans and lines of credit, because those are the two most requested products that you've asked us for. So we've formulated some really, really stellar relationships that are very hard to create to help us. And so far, our initial testing has been nothing but huge success of getting people really low interest rate credit lines and long-term loans. Whereas before, these people would have went into a cash advance. They would have got a credit card stacking program. Now they're getting those if they want them, and the term loans and the line of credit. So some pretty exciting stuff. I'll do another webinar with more stuff that we're diving into. But for now, I want to open it up for any questions. If you guys have any questions, please make sure you type them in and let me know as I do kind of a quick wrap up. So while I'm here on business loans, again, really cool options, lines of credit, long-term term loans. What we're primarily looking for with lines of credit is a 620 FICO score and 10 grand month in revenue. If somebody just has the revenue and not the FICO, you still want to talk to us about them, because we still have options where credit doesn't even matter. When we come into the building of business credit, and remember guys, as I go through this wrap up, if you have any questions on anything we talked about, let's go ahead and get the questions typed in. I want to go through them, make sure they're answered. Remember, in the steps, there's a lot of things that we provided clarity on. You know, step one, this stuff isn't necessarily mandatory. Some credit issuers will deny you because you don't have things, because you're using things like a home address. Most won't. Okay. The more red flags you have, the harder it is to get loans and credit. Okay. As we come down, using a high risk name is going to make it harder to get loans and prevent some kind of credit, but not all. Okay. The business address, never use UPS and PO box. But again, using a home address, you're going to be okay, but some credit issuers will still deny you. You know, using the LLC or corporation, it's not mandatory, but if you use a partnership or sole proprietorship, you're going to be personally liable for what's happening for your business. 411 is a must. You have to have it. It's required often with many credit issuers and many lenders. So you should make sure that you at least have the 411. And again, you don't have to have a business fax number, but it's a good idea. What you never want to do is use a home phone or mobile phone. Those will easily get you denied. And don't forget about the new source we added in step 3 for $24 a month that reports to multiple reporting agencies. Credit line is $7,500 to be your phone now. Website, email, not essential, but again, doesn't make you look credible if you don't have it. EIN is a must. Okay, business licensing, not as much for business credit, but can be an issue for loans. And again, bank account, this becomes an issue if you've bought a corporation such as a Shelf Corp. They're going to look at this and verify when your business started. Bank references are often required with business credit sources as you're initially getting set up. So some things to go through there. Thank you, Ty Rock. I appreciate it, Rick. It's good seeing you, man. I hope you're doing well. As you guys can see, we went from not having a messenger to now we have what we call Slack, and we send about 8,000 messages a month through Slack. So it's all popping up on my screen here. George says, I have 5 vendor accounts through the credit suite and I paid them early. How many times should I order? Once. Kind of. You know, credit reports show the recent amount of credit you've used. So if you go too much time and you don't use some kind of accounts, then you won't show activity. I personally never stop. I still use Uline. I still use Quill. I still buy batteries from Granger from time to time because I want them to see a bunch of recent activities with a bunch of my accounts, but it doesn't have to be that way. Just know that if you don't use them, and let's look at a real commercial credit report here. When we look at these, they're seeing the recent amount high credit used, right? If you don't use these, here's a perfect example. Somebody probably got these vendor accounts and then they stopped using them. But here's what it shows. There is nothing there for recent high credit used. So lenders and credit issuers know that that's credit you have, but you're not using. I like my credit reports to personally have all these have a number in them. And in order to do so, you have to use them. Now, as you build more accounts, I wouldn't worry about it. As you get 10, 15, 20 accounts and you're using Amazon, you're using Staples, and that's hard. I like to use Amazon because it's easy, but I still go buy stuff on Staples and Office Depot and pay more money than I should just because I want lenders and credit issuers to see my recent high credit limit used. I don't want those to sit dormant, which is why I use them. And just like with consumer credit, if you don't use them, they may withdraw the credit. It may go away. So some things to think of. But to directly answer your question, once you buy it once, it reports on here, and your recent high credit's good, and you can move on to the next step. But again, it's not a bad idea to use them from time to time to populate some kind of number here so people can actually see that you're using all the credit that you have issued. Again, guys, any great question, George, any other questions, go ahead and get them typed in. Remember, in step 2, they want to do that free search with Experian or Equifax. If they don't, then there's a good risk they can have a bad credit report and score, even if they have no credit. We also help them get set up with Dun & Bradstreet and activate their credit profile, which saves them that $1,500 or $2,000 that they'll pay if they don't know about that. Don't forget all the new vendors we've added here, guys, for, let's be honest, services and products that anybody can use. Phone service, Flying J, okay, website hosting, SEO services. This is stuff that almost anybody can use. And don't forget to tell your clients that we're adding more and more exclusive sources any day, sources we're working with to help get approved. So they're not in forums, they're not in videos, they're not out there. And just so you know, everyone I'm calling exclusive, I guess maybe the word exclusive isn't right because somebody else could naturally find them if they were, which would probably be hard to do, but I don't talk about them anywhere. Not on my videos, not anywhere. I'm talking about the same 3-4 vendors that are out there, period. The rest of all these, nobody's going to know about. I recommend you don't talk about them either. Let's start creating more of a huge exclusive database of vendors for our clients. That's one of our big goals. So remember, a lot of these sources, and we've seen on commercial credit reports what this looks like when we take somebody from no trade lines to even one being added. We see their score go from failing to awesome, where they're low risk with even one account being added. So make sure you convey that message to your clients. And don't forget, as they continue to build business credit in their other rounds, we condense years of business credit building to months because of those 4 ways that we help make sure they get approved. We put them in a certain tier of order. We gray out everything they can't get approved for. We list the underwriting guidelines for every single source. We even say exactly how many accounts they even need for every single source. We have multiple ways to make sure they get approved. We even have a lot of accounts that don't report, which are still really good for trade references, etc., as we're helping them too. Because if you're dealing with a startup, startups don't even have any trade references to add. But by getting set up with AT&T or Verizon or some of these other sources, they could use those as trade references. So we're helping them through the system as well. All right, I don't have any other questions. I'm going to go ahead and wrap this up. A lot of good information. A lot more stuff is going to be rolling out. We'll notify you guys. Guys, I have some stuff that I can't talk to you about yet because We haven't tested to see if it's legitimate as we think everything shows that it is. But there is some stuff the next 90 days that's going to be coming out that's going to be a game changer for our entire industry. There's some really cool stuff coming on. So some new vendor sources, some new ways to add accounts to business credit reports, some new lenders, new programs, all kinds of things that are going to be coming up here into 2018. It's going to be a great year for all of us. If you have any questions, need any help along the way, make sure you reach out to us, everybody. support@creditsuite.com. Thanks for taking the time to tune in today. I look forward, and let me see if I have any other questions. I think one other question just came in. Nope, I think we're good. If you all do have any other questions, please reach out to us and let us know. support@creditsuite.com. Otherwise, I'll see you next Tuesday at 3 o'clock Eastern. Thanks, everybody. Have a great day.